All right, greetings everyone. This is Eric, founder and CEO of Cubicle Investing. Definitely check out the website at cubicleinvesting.com. And also, if you're looking to join a community where you can trade with like-minded individuals and get a lot of information that will assist you in being successful, then definitely again check out the website cubicleinvesting.com. With that being said, today is Sunday, October the 27th. Obviously, the market is closed. It's approximately 10:42 a.m. Eastern time. I thought I would make a video today because I haven't made a video in quite some time. So I do apologize, but I've been extremely busy with just life and just, trading and running my options trading community board that's online. And so just been really busy, and so it takes some time to make these videos. So I haven't really had much time, but I will be making more videos as we progress to the end of 2024. And also, if you find this information helpful, like the video, subscribe, and also share the video out to those who may be interested in learning how to trade options. Again, I'm looking to reach 1,000 subscribers or close to it by the end of 2024. All right, with that being said, so some of the things that I use to be successful at trading options, and I primarily trade the SPX 0 days to expiration options, right? I do trade other underlines as well, but I primarily trade the SPX. And what has allowed me to be, pretty much successful at trading SPX 0 DTE options is I've come up with some rules that I follow to a T, man. If anybody that knows me will tell you that Eric is extremely disciplined when it comes to trading and really much, in life, financially, nutritionally, spiritually. I'm just, my identity is cloaked, if you will, in being disciplined. So one of the things that several of the things that I do to be successful at trading options is, one, before, I look to put on any trade, I go to this website here. This website, let me pull up my pointer here. So this website here is forexfactory.com, right? And so this website is really good to stay informed about what news is on the horizon that could potentially impact how the SPX moves, right? So that's extremely important, particularly if you're trading 0 DTE options, right? So as you can see here, so as I mentioned, today is October the 27th. So we can go here, right? Click on the calendar, and we can see that, apply the settings. We can see that on Monday, there's no major news. Well, actually, let me look at the filter here. So you can actually click on this filter setting here, and you can have it to only show news that's high impact news, medium impact news, or news that's low impact. Normally, what I'll have checked is just I'm just looking for the high impact news, but I oftentimes will have the medium and also low checked as well. I will hit apply filter, and then again, I can see throughout the week what news is on the horizon that could potentially impact how the SPX moves, because that's extremely important. So that's the first thing that I do, right? And also, understanding that if your position is threatened, right? If you put on a position for Monday, let's say, and your position is threatened where you have to roll, you want to know, if you're going to roll into Tuesday or Wednesday, what news is again on the horizon or is going to be released on a day that you will potentially roll to, because really you don't want to roll into a day where there's going to be some high impact news that could potentially, again, threaten your position for a second time after you roll it. So oftentimes what I'll do is, as opposed to rolling into a major news event I'll just close the position out as quickly as possible for a small loss. So hopefully that makes sense, right? So the second thing that I do, and I actually have, so every Friday, we have my community that I run, we have a live trading session. And so I constantly go over the rules that we should be using to govern how we trade SPX 0 DTE options, right? And so the second thing, the second rule that I always convey to my members is understanding and being aware of, let me just pull up my spreadsheet here. Pull that over. So being aware of where the SPX has ended each trading session, particularly over the last, 3 to 5 days, because what I have noticed over the few years that 0 DTE options have been available for the SPX is that the SPX likes to do things in odd numbers, if you will. So for example, I know that, well, I don't know, but there's a high probability, right? There's no certainty that there's a high probability that if the SPX is down or finishes the trading session down 3 consecutive days, then on that 4th day, it's going to be up, right? And I've noticed that quite often. So between 3 to 5 days, as you can see here, it was down 4 days in September, and on the 5th day, it was up. Now here's another 3 days, 3 days down in August. On that 4th day, it was up. 3 days down here in July. On that 4th day, it was up. 3 days down again in July. On that 4th day, it was up. So I like to keep track of where the SPX has ended the trading sessions over the last 3 to 5 days, so that this kind of helps me. It kind of gives me an edge, and also it informs me as to which side of the trade I need to be on, whether it's going to be on the call side or the put side. Now, in a situation like this, where I'm sorry, all right, my apologies. So in a situation like this here, where it was down 3 days, 3 consecutive days, October 21, 22, and 23, I immediately, on that 4th day, I was looking to go on the put side, right? To put my credit spread, my put credit spread on the put side, right? Because a put credit spread benefits from the price of the underlying. In this case, the underlying is the SPX going to the upside, right? So again, understanding, that's my second rule, just being aware of where the SPX has ended the trading session over the last 3 to 5 trading sessions. Let me close that out. And then the third thing, and again, for you guys who have been following me, you know that I come up with these levels of interest every day that I send out to my members. And this is the format that I sent out the levels of interest to my members in. And so you have 3 levels on the call side and also 3 levels on the put side. And then also what I do is I always send out what the opening price was, right? And then I'm not looking to put on a trade unless the SPX has moved 20 points above, right? Let me pull out the pointer again. 20 points above the opening price or 20 points below the opening price. And I always say that, money is an abstract form of energy, or currency is an abstract form of energy. And so the currency that comes in or out of the market, if it causes the market to move, or the SPX to move 20 points above or below the opening price, then that's a lot of energy expenditure from my perspective and my experience. And so from that point on, I'm looking to actually place my option spread, my credit spread in the direction in which the market is moving, in which the market has made the 20-point move. So in other words, if the market made a 20-point move to the upside where it went, 58.46 on this particular day, which was, this past Friday, then, that signifies to me that, the market has used a lot of energy to move to the upside. And that move maybe near its peak, or potentially doesn't have much further to go to the upside, right? Because a 20-point move above the opening price, that's a lot of energy expenditure. And so I'm looking essentially to go on the call side and just get out of the reach of the movement of the SPX, if that makes sense. Right? So again, so I'm, and I also use my levels of interest as a means, as a reference point to place my credit spread, right? So also one of the things I have noticed too is that the SPX rarely finishes the trading session beyond level 3 on the call side or the put side. Now, of course, there are going to be some exceptions to that, right? And we saw that actually this week, and I'll show you guys that in a few minutes here. But rarely does it finish the trading session beyond level 3 on the call side or the put side. Now, it doesn't make sense to go directly to level 3 when the market opens, because you want to wait for that 20-point move. At least, I wait for the 20-point move, and then I still don't immediately jump into the trade. I'm still looking at the market internals to determine whether or not that move, that 20-point move to the upside, is the full extent of the move, or does it seem to have more energy to move even further up above that 20-point move? So I'm looking at the market internals to determine that. And I'll talk about that, the market internals, in another video. So that's the third thing that I look at, and so going back to my rules. Yeah, so again, I'm looking to place my trade in a direction in which the market is moving. And then again, I'm looking to get to level 3 or sometimes beyond level 3, as long as I can get a decent credit. A decent credit to me is $20, $25, etc. Now, again, I want to be aware of what news is on the horizon for the next day, particularly because I might have to roll my position that I actually placed on whatever trading session that I'm looking to trade, right? And so if I'm looking to trade, for example, on Monday, placing a trade, I want to know what news is going to be released on Tuesday as well as Wednesday, because I really don't want to roll into a major news release on Tuesday or Wednesday. And so if my position, right, if I'm trading, if I have a position on Monday, if my position is threatened, and a position that I consider a threatened position is when the SPX is within 10 levels or 10 points of where your short strike is, right? So this will be your short strike. So if it's within 10 points of that, and as you can see here, I have a trade on for that expires on Monday. If it's within 10 points of that, meaning that it's at 5,900, then I'm looking to roll. But again, if there's high impact news that's going to be released the following day or 2 days later, then I'm looking to essentially just close the position out for a relatively small loss. And I say relatively because, small is relative to the size of your account. Okay. So And as you can see here, I put this trade on Friday for Monday's expiration day. So Friday was October the 25th. And I put this trade on the call side, as you can see here, right? Call side. And I sold, so here's my short strike at 59.10, and my long strike is at 59.15. So as you can see here, I have 9 contracts. And so why did I put this trade on? Well, if we look at the chart here, we can see that at 9:30 a.m., the as soon as the market opened, the SPX just popped right out of the gate. As you can see, so I got into the trade at 10 o'clock, right? And so the opening price, as you can see here, if you look over here, the opening price on October the 25th was 58.26, right? So I was looking for a move, a 20-point move beyond that, which would have been 58.46, right? And so at 10 o'clock, right, we can see that the high was 58.59. So it went 20 points above the opening price. And so I was looking to get into a trade almost immediately. Why? Because it was a Friday. And also at 10 o'clock, I was looking at the market internals, and what the market internals were telling me, just based upon the amount of volume that was coming into the SPX, and also the number of underlines that was increasing versus the number of underlines that were decreasing on the New York Stock Exchange, which is what the internals convey, right? I knew that probably the SPX wasn't going to go much higher than 58.59, and so essentially I went, to 59.10, which is well above the current price, and also the IV rank was pretty high. The expected move was relatively high on this particular day, and so I just went, again, I went in a direction in which the market was moving. So it was moving up. So I'm looking to move. I'm looking to place my position in a direction in which the market is moving, because there are times where the market obviously can reverse, like we see here, and actually peak out and then reverse direction and actually come back down. And so intuitively, it kind of makes sense to go on the put side if you see the market going to the upside, because on the put side, right, your position would benefit from the price of SPX moving to the upside. But as you can see here, it actually peaked out at 58.62 and it came back down. So had you been on the put side, potentially your position would have been threatened, right? And so as you can see here, the trade was already profitable on Friday, so I could have just closed it out. But I'm going to close it out I'm just going to let it expire on Monday and walk away with the 252. Well, it's actually 250, I believe. And yeah, because these numbers get kind of warped when the market is closed. And then I have a RUT position on as well, where I'm looking to get roughly around $570. But and I can show you guys that position as well. As you can see here, it's well out of the money on the RUT, and I'm going to talk about how to trade the RUT in another video as well, because the RUT I actually think is a better underlying to trade options on, particularly 0 DTE options, because the RUT, which is the Russell 2000, consists of 2,000 underlines, right? And so it has a tendency to move much slower than the SPX. But nonetheless, so essentially those rules are what I use essentially to have a 80+% win rate over the last couple of years trading SPX 0 DTE options. So hopefully this was helpful. Again, if you guys have found this information relevant to what you're doing, please like the video. It doesn't cost you anything. And also subscribe and send this video out to other folks who may be interested in learning how to trade options.